Back in the 90s, this pro trader found out that these candlestick patterns have a hit rate of over 70%. Okay, there's a bit more to it. I crafted a strategy containing this powerful pattern. I backtested it thousands of times and the strategy was profitable in any tested month. Let's not waste any time and dive directly into the details. The names of the candlestick patterns we are talking about are the morning and evening star pattern. They consist of 3 bars. The morning star starts with a large bearish bar, followed by a small bodied candle like a doji or pin bar, and finally one bullish bar. The evening star starts with a bullish bar, followed by a small bodied candle like a doji or pin bar, and finally a bearish bar. These patterns often mark the top or bottom of a price move and have this incredible hit rate. In his well-known book, Thomas Bulkowski has noted that the morning star ranks relatively high among candlestick reversal patterns in terms of reliability. He reports that it correctly acts as a bullish reversal around 70% of the time in bull market testing. The evening star often shows a comparable success rate for predicting downward price movement. Using them as part of a strategy will always be an advantage and provide great market entries. Now I will show you step by step how I use them in one of my profitable trading strategies. The setup works in ranging and trending markets. If the market goes sideways, I use the following approach. First, we want to trade when there's volatility in the markets. That's why we choose one of the 3 trading sessions during the day. You can trade during the Asian session, the London session or the New York session. The strategy works for all sessions, but I prefer the London session the most, so let's take this one for illustration. The London session takes center stage between 8 AM and 4:30 PM GMT. If you want to see all the sessions on your chart, you can just use one of the dozens of session indicators out there. They are all for free. What we need to do now is to define the high of the session, which is the highest price we had so far. And then the low of the session, which is the lowest price we had so far. These areas are where the magic is happening. If price is moving down and takes out the low of the session, it's time to look for an entry. If price manages to recover and print a morning star pattern, chances are good that we will revisit the session high. The important thing is that the pattern closes above the session low, which is the confirmation for the long setup. Enter at candle close, place a stop loss below the pattern low and target the session high. Look for a risk-reward ratio of at least 2:1 to further lower your risk. Now price moves up, reaching the top of the session and our target. That's where it gets interesting. With taking out the top, market grabbed the buy side liquidity. If we fall back below the session high and print an evening star pattern, we have the perfect short setup. Just make sure that the pattern gets confirmed below the session high. Enter at candle close, place a stop loss above the high of the pattern and target the session low. At the end of the session, if price didn't reach your target, don't be greedy. Just close your trade and take the profits home. Let's take a look at a real trading example. We are on the NQ 5-minute time frame in the middle of the London session. Let's mark the session high and session low. After a while, price reached the session low and confirmed the Morningstar pattern right afterwards. I entered a long position right at candle close, placed my stop loss below the pattern and used the session high as target. The setup played out perfectly. There's another way to use this powerful strategy. Therefore, you need to make sure that the price is forming a clean trend, up or down. To see if we are an up or down trend, you can add the simple moving average to the chart and choose 50 for the length. If we are above the MA50, we are an uptrend. Now wait for the price to pull back to the moving average line. If we bounce off and form a Morningstar pattern, it's the signal for us that the uptrend will continue. Enter at candle close, place the stop loss below the low of the pattern and use 3 times the risk as your target. Alternatively, you can look for a previous high if it provides a better risk-reward ratio. If we are below the moving average, which means downtrend, again wait for a pullback to the line. Then, after we bounced off, look for an evening star pattern. Good chance that the downtrend will continue. Enter at candle close, place a stop loss above the high of the pattern and use 3 times the risk as target. Or alternatively a previous low. Here's a real trading example to show how well this strategy really works. We are at the ES 5-minute time frame and price is below the moving average. After a pullback to the moving average, we formed this evening star pattern. Let's place our entry at candle close, stop loss above the pattern and use 3 times the risk as target. After the trade played out, we went back above the MA. A bit later, after a pullback to the moving average, we formed the Morningstar pattern. So another great long setup. Let's place our entry at candle close, the stop loss below the pattern, and use 3 times the risk as target. That's another winner. What if I tell you that you don't even have to look manually for morning and evening star patterns? You can just add the free morning and evening star pro indicator by TRN Trading to your chart. It detects morning and evening star patterns fully automatically and is the perfect companion for this strategy. That's it for today. If you try the strategy yourself, please post your results in the comments. I'm sure you can outperform the market. Happy trading!